Hey, what's up guys, welcome back to the channel. In today's video I'm going to be talking about 3 dirt cheap clean energy stocks under $20 that could benefit massively from the upcoming multi-trillion dollar infrastructure bill. We haven't really had a bill of this magnitude passed in this country in over 20 years, and given the insane shift we've already seen towards solar panels, electric cars and fuel cells, I think this kind of bill can help completely revolutionize the US economy. As a result, there's going to be a bunch of stocks that will benefit hugely from this kind of bill passing, and those kinds of stocks are exactly what I'm going to share in this video. But before we get into it guys, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. The first stock up here we have is ticker symbol STEM or STEM Incorporated, which is a battery energy storage company that leverages artificial intelligence to essentially allow businesses the chance to use renewable energies like solar and wind much more efficiently. We all know for a fact that the energy industry is headed towards renewable resources to power our lives instead of oil and gas. But the problem is that solar and wind are really hard to work with for businesses because of their weather dependent and inconsistent power output, which is exactly where STEM's batteries come into play. This company's batteries and intelligent software essentially enable companies to store any extra renewable energy and use it at a later time, especially for when solar and wind might not be producing sufficient energy to keep up with the demand. What this essentially does is reduces the company's dependence on the expensive prices from the electric grid and reduce their carbon emissions, since obviously they're not dependent on burning coal and gas to produce their electricity. And since the infrastructure bill has around $135 billion dedicated to improving clean energy access, STEM will benefit hugely from this kind of bill passing without even considering the already strong revenue growth that this company is having right now. And as we've all seen over the past couple of years, the grid is super unreliable and blackouts are becoming a bigger and bigger thing across the country, which is only going to further fuel the demand for STEM's products in the market. As you can see, the entire energy storage market is projected to grow at an insane rate over the next 5 years, and since STEM is literally one of the top suppliers in this market right now, this stock will benefit massively. And that paired with the fact that the CEO and CTO of this company have decades of experience in starting up and selling companies at multi-billion-dollar valuations makes STEM one of my favorite clean energy stocks to buy now ahead of the infrastructure bill. If we have a closer look at the stock chart of STEM, you can see that this stock has had one of the biggest runs of any stock so far in January and February of this year, from around $10 all the way to $50, which is right around when the growth market and the clean energy sector actually peaked. And as you can see, since then STEM ended up selling off aggressively all the way to $16 in May, and then rebounded extremely quickly as more and more institutions ended up buying the stock and seeing a lot of value in this company. But since then, as you can see, the stock ended up peaking around $38 and has just sold off on very light volume, which tells me that there is no institutional selling behind this move to the downside. And basically this creates a fantastic buying opportunity for retail traders like us who are interested in investing in high growth companies at cheap discounts. As you can see on the daily time frame, the MACD is signaling a bullish divergence even though the price action has been going down, which tells me that we could be nearing a potential bottom on this stock around this $20 region. As a result, anything under $24 generally speaking is a very good deal for the stock in my opinion, and my long-term price targets are $50 and $80 for at least a 3 to 5 year hold. And I came up with those price targets based on STEM's own revenue projections for the next couple of years, and as a result I'm extremely confident this stock can be a multi-bagger play, especially since we have the infrastructure bill coming up in the next few weeks. The next stock up here we have is ticker symbol NKLA or Nikola Corporation, which is a hydrogen fuel cell trucking and energy company that I'm sure most of you guys have heard of. I last made a video on this stock back in July, and it was safe to say that many people are still very skeptical of this company even though these guys have been executing on all of their goals for this year. And in my opinion, this is where the real opportunity lies in this stock, which is the fact that many investors still don't understand the massive market opportunity for the electric trucking and hydrogen infrastructure space that Nikola is developing in right now. You see, Nikola plans to produce both the battery and the fuel cell versions of its Class 8 trucks starting this year, with revenue expected to start coming up in this quarter. And we all know for a fact that the transportation industry in the US has to go towards an all-electric platform, including these heavy-duty Class 8 trucks, which is why when the infrastructure bill passes, Nikola can benefit massively from all the investments that the bill has planned for hydrogen fueling stations and infrastructure. And the thing is that Nikola is literally the only company in the US right now that's developing electric trucks that can also run on hydrogen, which as we find out is definitely more suitable for long-haul trucking applications. And since in the US the trucking business is a huge part of our economy, Nikola will have a significant first-to-market advantage when they start rolling out their production-ready trucks at the end of this year. Heck, even the Tesla Semi, which was announced over 3 years ago, has not been seen anywhere on real roads so far, which just goes to show how difficult it is to design and produce fully electrified trucks, which is why Nikola's plan to launch their battery semi-trucks this year will be a major accomplishment. And as you can see, Nikola has been consistently expanding their partnerships with companies in the natural gas, hydrogen technology, and dealership space, which should really allow these guys to ramp up sales for their products extremely fast beginning next year. And that paired with the fact that Nikola recently took a 20% stake in a clean hydrogen production plant in the heart of the US trucking network makes me believe that the infrastructure bill will more than likely bring in a lot of tailwinds for this company's stock. And as you can see, the stock price for this company has been selling off aggressively for the past year or so, all the way from their $90 highs that the stock made back in June of last year. And now we're trading right around that $10 level, which is exactly where the SPAC initially had its IPO at back in 2019. And this is really the huge opportunity on this stock, because the risk on this company now is extremely low, because a lot of investors have already priced in the worst case scenario, which is the fact that this company might get delisted, or they might have gotten convicted by the Department of Justice for the scandals that they had last year. And as you guys might remember, back in July is when Trevor Milton got indicted for fraud charges and not the company itself. And Trevor Milton is not a part of this company anymore. He got off the board and he got off as CEO, which is exactly why I don't understand why a lot of people still bag on this stock. And since we are trading underneath that 200-day moving average and getting a bullish divergence sign on the MACD, tells me that the reward potential on this stock for even a short squeeze would be extremely significant. And since the infrastructure bill is expected to pass in the next few weeks, we could get a major run on this stock, which is why I think right now is the best time to enter in this company if you believe in their products and their business model. I believe Nikola can be a $10 billion market cap at minimum if they're able to roll out their Tre BEVs by the end of this year and start rolling out their customer production ready FCEVs next year, which is why my long-term price targets on the stock are at around $25 and $30 respectively. And if they keep expanding their revenue streams and executing on their growth plan going into 2023 and 2024, I definitely could see this stock at well over $50. The next stock we have here is ticker symbol BE or Bloom Energy, which is one of the most lucrative and underrated energy stocks in this entire market right now. This company essentially develops fuel cell servers that allow their customers to power their facilities and offices with purely natural gas instead of gasoline, while being completely independent of the electric grid. And since these servers utilize hydrogen fuel cells and not an internal combustion engine, they can make electricity with literally zero carbon emissions, which allows their customers to save a lot of money from the numerous carbon incentives that are out there. And this is exactly what makes the infrastructure bill a huge opportunity for Bloom stock, because as more money is poured into providing carbon credits, more and more businesses will want to shift to cleaner ways of powering their warehouses, office spaces, and infrastructure. And the best part is that Bloom already does around $800 million in revenue annually and actually has dozens of Fortune 500 companies use their products full time. And if you've been investing for the past 2 years or so, you might know that we've literally seen dozens of companies go public at the same or higher valuation as Bloom Energy's, but with zero revenue. This basically means that as an investor, you're getting a very low risk and a very high reward buying opportunity in this stock right now. And as the entire hydrogen industry grows, Bloom could become literally a single-handed leader in the stationary power sector. And in my opinion, that is something that will certainly deserve a multi-$10 billion market cap, way higher than the current $3 billion price tag for the stock right now. If we have a look at the stock chart, you can see that Bloom Energy went IPO back in 2019, and since then actually had one of the worst sell-offs that any IPO has ever seen. These guys IPO'd around that $18 to $16 price tag and ended up selling off all the way to around $2, putting this stock in basically penny stock territory. But as you can see, as the pandemic and the demand for clean energy and more renewable resources grew, Bloom stock ended up exploding back well above the initial IPO price. The stock ended up peaking at around $44, but has since then pulled back all the way to around this $20 region, which is why I think this is a great buying opportunity for the stock long term. And since the infrastructure bill is going to have a lot of investments for hydrogen fuel cell technologies and getting rid of the very toxic electric grid, Bloom Energy's products are going to benefit massively. And since we are above that 50-day moving average, we could definitely see a very nice move to the upside to at least that $25 region in the next few months. And like I said, since this company does over $800 million in revenue already, this company is a very low risk and a very high reward play, given just how crazy expensive a lot of other renewable energy and fuel cell stocks are. But anyways guys, make sure to drop me a thumbs up if you found some value from this video. Let me know what you guys think of the stocks I mentioned in this specific video. I'd be really interested in hearing you guys' opinions. But anyways guys, I hope you have a great rest of your week, and I'll catch you guys in the next video. Take care.